Hello traders, Gary Wagner here, 11:53 in Honolulu, 4:53 in New York on Wednesday, 27th day of December 2023, and this is the daily report for gold and silver. Gold continued to gain ground, now for the fourth consecutive day of rising prices. Currently, we have gold up $9.90, $10 right now, or 0.49%, taking the most active February contract to $2,089.20. It is within striking distance of this closing price that occurred on Friday, the first day of December, when gold traded to $2,091. As you know, we have been looking to buy a dip after trading and making a little bit on this last trade. We have not, as of yet, gotten that dip. However, now that we are so close to this top, I would be hesitant to buy into this price ascent unless we had an effective and solid close above this recent closing price, or, as I hope to see, some sort of dip and profit taking where we can enter at a more favorable price. This daily chart of gold contains a longer-term Fibonacci retracement data set beginning at approximately October 6th up until the highest closing value, which occurs just above $2,090. We can see that as this market went up, it did have one pretty strong dip here, a small correction, and after hitting the record high and going well beyond that to $21.52, it corrected to the 38.2% retracement based upon putting the Fib data set at these open and closing prices rather than the extreme highs. That being said, now that we are quickly approaching that price again, I believe it could challenge it. A close below and a further move up would signal an absolute breakout. However, I believe it is more likely that we will see the market retrace. If in fact that does occur, which is what we have been waiting for, I would look to enter somewhere between 2030 and 2040 based on the 23.6% Fib retracement at $2,030.50. As I said, I think it is a little bit too risky to buy gold as it approaches this record high here. However, if the market really wants to run, it could in fact break out, and it would have to be on a closing basis for more than one day for me to determine that the best course of action would be to actually buy the breakout. We have done that on many occasions, but very rarely have we done it when it was at an all-time record high as we are currently at, because typically when we've had record highs, such as the first one in the middle of 2011 when it hit just above 1900, it lasted 2 days and quickly eroded. The same thing occurred right here. For that reason, we will maintain our neutral stance with no active trades. We have put in solid trades and made money on gold this year. We're not going to get every bit of movement in gold. My top priority is coming out with a profitable year, and that sometimes means avoiding a trade that could be profitable, but I believe contains more risk than it warrants attention to pull the trigger. Traders, we are looking at a daily chart in candlestick format of the March contract of silver futures. It is up 24 cents at 24.64. Unfortunately, if you look at the low that came in, it came in exactly at $24.22. That is the precise point in which we raised our stop up to. We were stopped out going long at 23.48. and exiting the trade today at $24.22 for a profit of 74 cents per ounce, or $740 of profit per 1,000 ounce position. Lastly, I do want to take a look at the dollar. The dollar has been a significant component of recent gains in silver and especially gold. The dollar lost almost 0.5% today. Gold gained about a full percent. So we not only had investors bidding the precious yellow metal higher, but trading the dollar lower. The dollar breaking below 101 is significant. As you know, we looked at potential support at the 78% fib retracement, 101.17, a clear break below that. On a technical basis, there really isn't any real support until about 100.80. If you read the second half of our opening letter today, there was an announcement by Russia and Iran to begin to trade, and their primary trade export is oil, effectively and possibly destabilizing the dollar's unique position as the world's reserve currency. We'll have to wait and see how that develops, but that could be a significant factor moving the precious metals higher next year. More on that on our Outlook 2024, Part 4, which we will release on Friday. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.